From our perspective, this is an incredibly good time to invest, because what's happening with the markets is the markets are acting as if we're heading towards a recession. The economic fundamentals seem stable enough as investors that you can be confident enough and go and invest in stocks. And valuations for sectors have gone down because the market is worried, and you buy when everyone else is worried. So I think it's actually a really good opportunity for investors to be buying right now. Yeah, look, I think one of the stocks that we're into at the moment is NextDC, and historically we've been in the stock for about 3-4 years now. We think the market is slowly only now starting to understand the true earnings potential of this business. Over the last 2 years, what we've seen is the market's understanding of this business change. When NextDC was first bought to IPO 3 years ago, the market looked at this stock and said, well, over the next 3 years, you should be earning this much revenue, you should be growing at 25%, etc., etc. The fact is that the data center industry doesn't work like that. They work on big contracts, and these big contracts come at lumpy times. And once they come in, they're locked in for 5 years. So you might not see anything for 6 months, and then suddenly one big contract comes in, takes out 10% of your capacity, and your earnings base has gone up. And being an infrastructure company, they have a huge high fixed cost level. So until you hit to that fixed cost, you're cash flow negative. And as long as you're cash flow negative, it looks like you might go bankrupt if you just look at the cash flow statement and balance sheet at face value, and not think about what the earnings upside is once you pass that line of cash flow break even. NextDC in the last 12 months has just gotten to that stage. And not only has it gotten to that stage, there's been an acceleration in the use of data centers in Australia and data centers globally. If you hear what Google, Amazon, and Microsoft have been telling the market, they've been booking for demand 2 years in advance. And so they came to NextDC and asked them, we need more capacity in Australia. So NextDC had to raise capital to increase their capacity and plan to increase their capacity by 30%. So not only they became cash flow positive, they've now they've increased the size of the potential market. So we think the market is still getting into terms with the non-linearity of their earnings growth, and so therefore they're still discounting it too much, but for the value potential that's in the business.